billion question. Today, Bitcoin has crossed 1 crore rupees. By 2030, what is your prediction for one Bitcoin?
I won't be surprised if it starts to get into the million handle.
What do you say? Why do you think that the Indian government not accepting crypto with open arms?
So one of the use cases of crypto is that you can make transfers very fast. So if you want to send US dollars from US to India, this would go through a SWIFT protocol, one bank, another bank. It will take about 3 to 4 days.
Correct.
But with coins, you can do this within 10 minutes.
Let's say I put 10 lakhs in crypto 3 years back, and fast forward to today, it's at 25 lakh rupees. And the tax department is waiting for, collecting their 30% cut. Is there a way to sort of optimize this in any way where I can minimize my taxes? Now I want to invest 10 lakhs in cryptocurrencies. So what are those top 5 cryptocurrencies that you would recommend me to invest in?
Typically, I would go with
You're saying that the volatility of Bitcoin will reduce in the future.
Yes.
So any interesting stats you can share on how much it has reduced?
Yes. Let me touch upon this. So volatility, you can also measure it. So what you do is how much is the daily return changing on an average? Like you take all the daily returns and try to see how much is it consistent or inconsistent around a certain number. So this volatility is measured theoretically, and then there are volatility markets where people trade the expected volatility, and that is called the options market, right? In options market, what you are actually trading is the volatility, because this is the sole driver that determines the premium of a call or a put option. Higher the volatility, higher the premium. Now, first markets of volatility in Bitcoin started to appear around 2017. So Bitcoin options market started to appear around 2017. There I have seen Bitcoin volatility used to trade for 1 month time horizon, 500% annualized.
500% annualized.
Annualized.
1 month deviation.
1 month was the duration of the option. You always quote volatility is how much is it moving per annum, right? So 500% per annum.
Okay.
If something is moving 16% per annum, then you are expecting 1% on an average daily return of 1%, plus or minus. Now that has come down to 65% per annum.
From 500% to 65% per annum.
Yes. And why does that happen? It's not like the perception of asset has changed. Asset is still very volatile, but the number of people who are trading the asset has increased quite a bit. So somebody then came about and said, you know what, 100% maybe is too much. Maybe 100 is the right number. I'll sell it at 100 because it was not moving that much. And this is how price discovery happens. Long story short of this is, I have seen Bitcoin volatility, the market of it go from 500% per annum to 50% per annum in the last 5 to 7 years. The theoretical volatility which you can calculate, that has also come down significantly. That would have come down again 1/5, probably 100% per annum to a lot lower in the last 5 years. And as Bitcoin becomes more institutional, more participants will come into this ecosystem, more and more traders will join, the volatility of the asset will keep on reducing.
So let's say now I want to invest 10 lakhs in cryptocurrencies in 2025. So what are those top 5 cryptocurrencies that you would recommend me to invest in?
Typically, I would go with the large caps, because they are the ones which are well-known, safe, well-researched.
No, let's assume that half will go into safe cryptocurrencies and the remaining half will go into like money-making, very, very speculative cryptocurrencies.
There's no options available that are liquid in crypto beyond top 2 asset classes, Bitcoin and Ether.
Achha.
Some exchanges have started to roll out options on other coins like Solana and Ripple, but it's not picked up as of yet.
Okay.
But some coins which are popular are Solana, BNB, XRP. These are some of the popular coins. They have different use cases, each one of them. If you want to get into smaller coins, I would advise researching them because you'll probably not get beyond 5 coins, right? The question is 5 in itself.
Yeah.
So if you've already said that, look, half of it will do in Bitcoin Ether, then it's just about 3 coins. So take time to research those 3 coins. They're probably going to be somewhere in the top 10 market cap anyways. And this is where there'll be an opportunity to make great returns.
So what is the craziest amount of money you have seen being made in cryptocurrencies?
Trump coin in itself was quite crazy. I don't advise putting money into meme coins, but yeah, Meme coins this year have been quite.
So what is the story of Trump coin? You said it has
So
great.
after Trump got elected and before his inauguration, which is final joining of the office, before that World Liberty Financial, which is his company, they launched a token called Trump token.
Huh.
Now there is no backing of anything to it. It is just a meme coin, just like the name states. You like Trump, you buy the coin.
Huh.
Is there any reason for the coin to go up? No.
Huh.
Is there any reason for the coin to go down, up? No, nothing. This is just coin.
Okay.
And he said it as well. This is just coin. There's no basis for it. And that coin became very popular. Over a weekend, I remember, and it started to move from, say, a few cents to a few dollars, and then like it doubled or tripled in value over a week or something, or over a weekend.
Got it. So I just read this interesting data point that if Bitcoin were a stock, it would currently be like the 4th largest stock in the world.
Yes.
Right after Nvidia and before Google. I think its collective market cap itself is around $2.2 trillion. Not just that, there are mutual fund companies in the US who are launching crypto ETFs. There's a Bitcoin ETF and Ethereum ETF that people can purchase like a stock.
Yes.
Recently, Donald Trump has allowed the 401k, which is like the Provident Fund of the United States, to invest in crypto. Which is like imagining India ka Provident Fund is now investing in crypto.
Yes.
So when these kind of disruptive things are happening halfway around the world, why do you think that the Indian government, not accepting crypto with open arms? Why do you think that's the case?
I think every economy has different challenges. We have to take care of the very poor as well. We have to take care of the very rich as well. And we have to take care of everyone in between. So yes, government has a unique challenge. What we should do as a country is, we should be open to this industry. That look, this can be a big industry and we should look to participate in it. Every new industry creates opportunities. So what are the opportunities here? So first, job creation, right? We have a lot of people. We want to create a lot of jobs. Now look at Web3 ecosystem. 12% of all Web3 developers, blockchain Web3, all developers come from India.
Okay.
India is the second largest player in terms of talent, Web3 blockchain developer talent.
And why is that important, having Web3 developers?
So if US, let's say, is going to do so many things in crypto, if crypto is going to be a big asset class, then there's going to be a lot more companies that are going to come up and start their businesses in blockchain, Web3, crypto kind of industry. When they do that, they will need people who will program for them, code for them. This is ultimately programmable money, right? So they will need a lot of programmers who will do this. Who is the best supplier of programming talent in the world? Indians. So for us, this is something, a new frontier is opening up in our backyard, and we want to be on top of that frontier, right? So we should think like that. We can do all the programming opportunity that is out there. We can be the programmers for it.
So
that will create so many jobs.
I understood about the employment aspect, but just to help me understand the need, or what is this transformation looking like? Because you're talking about creating this Web3 infrastructure for the world, which means something is getting replaced by Web3 infrastructure. So can you give me one practical insight of what something that is currently there, which everybody knows of, is becoming rapidly replaced with this Web3 world that you're talking about?
So stablecoins is a big move in that direction in the US. They have passed a bill, which is now an act, the Genius Bill, which is about stablecoins. So what is a stablecoin? Stablecoin is nothing but a crypto asset or a cryptocurrency, which is backed by the fiat currency, the normal currency. So one stable coin is backed by $1. What that does is, now you have a US dollar on blockchain ecosystem. So you can buy and sell using this stable coin, and it will represent $1 at the back end, right? And now, so one of the use cases of crypto is that, or blockchain and cryptocurrency, is that you can make transfers very fast. So now you can make international remittances very fast. So if you want to send US dollars from US to India, this would go through a SWIFT protocol, one bank, another bank. It will take about 3 to 4 days.
Correct.
But with stable coins, you can do this within 10 minutes. So crypto and blockchain is not just about replacing the existing technology or infrastructure. It is also about creating a lot of new opportunities. For example, with UPI, you didn't create much new because money transfer was still available. Online money transfer was still available. But the fact that you made it so easy made it penetrate so fast, so deep, and it got so many people online and made commerce flow so smoothly. Right? You can do that in international trade. Now, what did I say? I said people in different countries don't need to learn different technologies because you can do it on Ethereum blockchain. But how you need to know how to do it on Ethereum blockchain. Some engineer is needed for that. Why is that engineer not Indian? Who is helping facilitate this technology between a European and an American? That's a power. So that's an opportunity for us. Then there's a second opportunity that if this crypto economy grows in India, then we will have tax revenue out of it. That is again a good, positive for the government. So you create jobs, you create tax revenue. Also, this developer that we just spoke about, who will program for blockchain and the Web3 ecosystem, will probably get paid in crypto. So he will need to then earn Indian rupee out of it by selling that crypto somewhere.
Right.
And then spend it in the economy to buy goods and services. So they will need a crypto exchange. So they do it on a foreign crypto exchange versus they do it on an Indian crypto exchange. That is much better for us. Because if it's an Indian crypto exchange, then it's a lot easier for Indian government to make rules around how much can you sell, how do you report your taxes. They are able to track the flow of funds. This is an information, that because Indian crypto exchanges by FIU have guidelines on who can transact, who cannot transact, how do you do the KYC of the person, how do you do the AML checks around the money, how do you do suspicious transaction reporting. All these things are now being put in place. So if we take lead in this, then all this part of economy will start to flow towards us. And that's how you build an ecosystem around these things, right? This is where you start to get and then there'll be new entrepreneurs who will think of local problems and use the blockchain Web3 ecosystem to solve the local problems.
Can you continue on that? What is that?
So for example, CBDC. It's a very interesting use case. Now what they say, and this is what the concept of Bitcoin is. Bitcoin is actually peer-to-peer transfer of digital cash. How do I send you money, which is peer-to-peer? This is the first line. How do I send you money which does not involve a third party or an intermediary for validation? So when I send you money through UPI, a bank validates that transaction. That Pankaj had this much. He told me to send it to Sharan, and I sent that message to Saran's bank, and I confirmed to the bank that I have deducted Pankaj's account and then transfer it to Sharan. So these are all the parties involved. But can you make a technology where Pankaj can directly send to Sharan without involving so many parties? This technology gives you the power to make transactions which are peer-to-peer without involving multiple intermediaries. Where it becomes very powerful in terms of banking the unbanked. To them, using a mobile phone, can you get a wallet, which is where you can give them e-rupee or digital cash. This is very powerful. Once they have that digital cash, they can transfer it to one another, exchange value, and then commerce can flow through.
Without having to have physical cash.
Without having to have physical cash. So there is difference between innovating on cash versus innovating on payments. What we've done with UPI and IMPS and all is great and phenomenal, but that is innovating on payments. We have innovated on a lot of things as a society, which is our email, the way we communicate.
Just one question.
Yeah.
Why is it important for us to innovate on peer-to-peer transaction directly? Because from the perspective of from an average citizen, like there's no change in my life because the bank is taking care of the transaction, let's say from me to you. Fine, there are intermediaries involved. So now if you create a technology, let's say blockchain, where banks are not involved and I'm sending money to you directly, what is the benefit for me? Because nothing has changed in my life.
Yes, it has. Because if you were not getting a bank account.
But what's the problem of getting a bank account?
A lot of people will not be able to get bank accounts because they will not be able to maintain minimum balances.
That is
because the bank has a cost of servicing a customer. Right? For you and us, we would have enough balance that we would be a customer that the bank is happy to serve. But for everyone else, there's a cost to servicing the customer.
So it'll help them.
It will
People
help.
who are below the poverty.
Yeah.
I understand about international transaction. That's a clear use case because I know I send money abroad. It takes 3-4 days. Sometimes it takes a week and I'm worried whether it's even sent or not.
Yeah.
And plus the expense is also very high forex and very high transaction charges and all of that. I think with crypto, it will be, you said, within 10 minutes and at a fraction of the cost.
Yeah.
So that is a clear use case.
Not only at the fraction of the cost, but the cost which does not linearly scale with the size of the transaction, which is a game changer.
Which country do you think has been the most futuristic when it comes to adoption of crypto and blockchain?
United States has been really ahead in this game.
So now let's talk about inflation. Let's look at all the important life events that a person has. That is purchasing a home, getting married and having kids. These three things. Now 30 years back, an average adult could do all three of these things without actually planning for it. Fast forward to today, 30 years from now, buying a house, getting married and having kids are all important life decisions. So much so that there is declining rates of home ownership, declining rates of even marriage, because people are like, if I get married, is there even a point? Because I can't even afford to take care of myself. How can I even have a kid and take care of the kids, right? So the world has really worsened, I feel, for the middle class. According to you, how exactly am I supposed to live my life for the next 30 years, planning for all of these important life goals? Now, before you answer, I want to share some interesting post-inflation returns of various asset classes. This is from April 2022 to 11 July 2025. In this time frame, Nifty 50 has given 42% total returns, CAGR of 11.3%, post-tax 10.09%, real returns is 5.15%. This is for Nifty 50. Gold ETF has given 80.23% real returns, total returns, CAGR of 19.69%. Bitcoin has given a total return of 185%, CAGR of 37%, post-tax 28.94%, and real returns of 23.16%. Now, looking at this, an average Indian will be like, bro, why am I even looking at Nifty 50 and all of that? Put all my money in Bitcoin and pray to God that I become a millionaire in the next 10 years. Now, obviously, there's one way of looking at it.
That's not
that is not the right way of looking at it.
That is one way you don't want to do.
So I want to ask you, as a person who is a professional crypto trader, what is the ideal asset allocation that you would look at, considering the disastrous state of the financial situation of an average Indian in today's India?
So look, new asset classes will have possibility of higher returns, but you don't want to put all your eggs in one basket in finance, right?
Yeah.
Not only do you don't want to put all your eggs in one basket, you also want to be very careful around how much percentage you allocate to each basket.
Yeah.
So crypto is a new asset class, volatile asset class. It can, and you also have to be very careful that, look, when you need the money, is the money available, right? So if you get at the time when you need the money and you think that you will be able to sell and get some part of it out, and let's say that's a bad time for crypto markets, then you might not be able to extract the complete value.
Right.
So invest only that much which you are fine to take the volatility with. So crypto should have a space in your portfolio allocation. But if you want it to be an asset class that has substantial ownership in your portfolio or substantial contribution in your portfolio, then you have to be very thorough with the research. You have to be very thorough with the research. You have to be very thorough with what's happening, and it's a decision that requires a lot of.
What is substantial according to you?
Anything north of 10% starts to get substantial.
So let's say I'm only thinking about Bitcoin and Ethereum, which itself is like 70% of the
pretty much 90%.
90% of the entire crypto world.
Yeah.
So if I can save, let's say, 30,000 rupees a month overall, can I put 3,000 rupees in Bitcoin and Ethereum, or is that also too much?
You can. That doesn't look like very risky to me.
Okay.
You can, because you're also talking about a very small number, because you start to go lower, that 1,500 rupees, 2,000 rupees, you just cut the quantum quite a bit.
Right.
So you can think of it like that. Also, when you are looking at people and they are saying that, look, my crypto portfolio is 25%, you have to ask them whether this is 25% after the appreciation or whether this is the amount you invested. right? Because if somebody invested and made in April 2022 and the value has gone 4 times from there or 3 times from there, and today they are 12% of their allocation, then what was it at the beginning, right?
Right.
So they probably started with 1 or 2%. All these great stories that you hear about people making a lot of money in crypto, the genuine ones typically are the ones where people invested very early, like 2016, 15, 14, when the price was very low, and now they are sitting on big part of their wealth is crypto because it's all the appreciation that has happened. Sub single digit allocation, still okay. You start to get to double digits, be very careful. And as it increases from there on, be more and more careful. Also, look to book profits. Look to take your initial money out when the...
Give me a framework for that.
So for example, you put 3,000 rupees a month, or let's say you put some lakh rupees into crypto. Now it's become 4 lakhs. Take your initial principal out. Take some profit out as well. Just park it. Don't worry about what am I going to do with this. Just treat it as your normal money. Now, whatever you have invested is your gain. And then you will have more power to withstand the losses with it. Realize your initial investment. Take your money out, book some profit as well, and get the basis covered. And then serious investor would also think that, look, my other opportunity would make me 10-11% per annum. So when the tide is good, and maybe it is, in a bull market, I take enough money out that I have made 10% IRR for the next 2 years.
So what is a good signal for a retail investor to understand that this is a good time to invest in crypto and I'm seeing some upward trend coming from here? How to understand? Like right
These
now, as we are talking.
Yeah, these principles don't change whether the investor is retail or institutional. The institutional is doing it as part of their job. So they do it more rigorously and almost on a daily basis. Because retail is doing this as not as part of their core activity, they do it more from hearsay and what others are doing. This is where the trap is. The FOMO is the trap.
Yeah.
When you do it because everyone else is doing it, when you do it because everyone else is getting rich, that is where you want to be careful.
But that's how money also...
That's how money works, unfortunately. Right?
Nobody wants to do research.
Yeah.
Everybody follows the money.
That's the thing. So again, what I've learned for myself is having some small percentage allocation in something also sort of builds a hook for me to go and track that thing more closely. And then I keep following the news and that's how I keep updated. But yeah, simple basic things as to whether the news flow is positive, whether the volume activity is increasing, whether the price activity and volume activity are reflecting the same. Is the news flow is too much and the price reaction is not that much? That means things have started to sort of get into overbought territory. Is the volume not that much but the price is running high? That means, it's running on fumes.
Okay. So finally, the most important question that everybody has, right? Let's say I put 10 lakhs in crypto 3 years back and fast forward to today, it's at 25 lakh rupees. Now I'm thinking that there could be a slight correction in cryptocurrency because it's rallied up a lot and I want to book some profits. Now there's a 15 lakh profit and the tax department is waiting for, collecting their 30% cut. Is there a way to sort of optimize this in any way where I can minimize my taxes? Do you know some crazy hacker on?
Usually
legal hack.
Yes, of course. I'm not going to. Yes, of course.
There is.
No, typically the way tax code would be written would be something that would take care of any of this, even in equities and in crypto and any other asset class. But look, maybe I will answer this question not so much from a point of view of tax optimization, but from a point of view of this is a real problem. Like I have 10 lakh, I have invested 10 lakhs, I've made 25 lakhs. Now I am sensing what will happen, I don't know. Nobody knows what's going to happen.
Yeah.
It can go up, it can go down. So, but I'm worried for the next 1 month, say, because of some events.
Yeah.
And I want to protect myself that, look, next 1 month I'm going to sit out of the market. But I don't want to sell.
Yeah.
This is where futures and options can help you. This is why these products were actually devised. Because it can give you that protection for a certain time window. It can give you a protection for a certain price window.
Okay.
Right? These are ultimately risk management products. You can use it for leverage, but the real value of these products is risk management.
Interesting.
I'll tell you. So in this case, for example, next 1 month, there's just too many news events. I want to set out of this, right? So you can short a futures contract. If you short a futures contract, it will whatever gain you register on your underlying asset or underlying Bitcoin or crypto asset, you will lose in your futures. But it's a hedge, right? By definition. So for every dollar profit here, you will lose $1 here, right?
Okay.
And that ways
you're keeping it stable.
Yeah. So let's say the profit went from 25 to 30, but on the hedge you lost 5 lakhs. So your net is still 25. Right? It can be the other way around as well. Let's say the profit went from 25 to 20 lakhs, but on the hedge you made another 5 lakhs.
So basically, it's like, still I don't know what's going to happen, but I don't want to know whether it goes up or goes down. I don't care. I just want my profit to be same.
Yes.
I got it. So this is basically a way for you to protect your crypto gains if you expect some volatility to come in the future.
Yeah. And then there is one-sided instruments, right? Let's say you're worried about, you want to say, if the price goes up, I want to enjoy the upside. But if it goes down, I want to be protected.
That is also there.
That is a put option. That is insurance. So just like you buy insurance on your portfolio, you can buy insurance on your crypto. This is called a put option.
So you make money when it goes up?
You make money when it goes up, but when it goes down, you don't lose money.
You only, you protect it.
But there's a cost to the privilege. So you pay the insurance cost upfront.
The premium that you pay for the
premium.
So that also you can do.
Yeah.
This seems very complicated. They're not teaching us about all of these things in schools. Like how do I learn about all these things?
If you're taking courses in finance, they will teach you all this. Today, internet has so much material.
No, but for crypto specifically,
the concepts don't change from asset class to asset class. You can go and read about call and put options anywhere, any asset class.
Okay.
Concepts will remain the same.
So you're saying the same concepts I learned for trading in the equity market can be applied for crypto market.
They can be applied in crypto market. There'll be nuances.
Okay.
But more to do with how it is done in this market. The concept will not change.
So now the billion-dollar question. Today, Bitcoin has crossed 1 crore rupees.
Yes.
By 2030, what is your prediction for one Bitcoin?
Look, my sense is in the next 5 years, there will be a lot of movement in the space, a lot of positives. I won't be surprised if it if it starts to get into the million handle.
What do you say?
I am not saying that it will be. I am not saying that it will be one-way traffic. I won't be surprised to see a big correction. Even if it happens, it's not going to be a one-sided right. It's going to be filled with corrections. But in next 5 years or maybe 5 to 10 years, I won't be surprised.
If one Bitcoin is $1 million.
Yes.
All right. On that note, guys, thank you so much for watching till the end. And I hope this is a very good informative session for you to begin your journey towards crypto investing. On that note, I'll see you in the next one.